Hello and welcome to Zee Commodity Capsule. Gold prices have managed to edge higher on Thursday after US Federal Reserve's rate cut, even as the policymakers remain split on the outlook for further easing next year, while silver notched another record high above $63 an ounce. Now, US gold futures is edged closer to $40 to $50 an ounce after Fed delivered a 25 basis rate cut in a divided vote, but they signaled the borrowing costs are unlikely to drop further as it waits for clear signal on softening jobs market and inflation that remains somewhat elevated even now. Having said so, Goldman Sachs sees significant upside to its end of 2026 gold price forecast of $4,900 per ounce. Copper prices on London Metal Exchange have paid most of their gains, and it's now holding near $11,600 a ton mark on Thursday. By the way, its all-time high stands at $11,749 a ton, which it touched earlier this week. Dollar eased after Fed trimmed policy rates, which has helped most of these industrial metals get some support. Fed said that it would start buying short-dated government bonds from Friday to help manage market liquidity levels in order to ensure the central bank retains firm control over its interest rate target system. Meanwhile, aluminium posted gains as global aluminium producers sought premiums of $190 to $200 per ton from Japanese buyers for Jan to March primary metal shipments, which is up from 121 to 136% from the current quarter. Morgan Stanley sees upside risk to copper price forecast. They see 2026 base case at $10,650 a ton, while the bull case stands at $12,780 per ton. Brent crude prices have slipped and has pared largely its gains from the previous trading session. It's trading below $62 a barrel on Thursday as investors weighed the prospects of supply disruption against a generally bearish crude outlook. US interception of sanctioned tanker near Venezuela prompted a pullback in shipments from the South American producer and heightened the fears of escalating tensions, which is why we saw Brent crude prices trading nearly 1% higher in the previous trading session. Adding to the risk premium, Ukraine struck a shadow fleet tanker tied to Russia's oil trade despite the US calls of ceasefire. But geopolitical risks were tempered by persistently bearish backdrop, with the rising output from OPEC Plus expected to outpace weak demand and create a supply glut. Last but not the least, Malaysian palm oil futures have gained some traction on Thursday, snapping the previous session's losses, supported by strength in rival oils on Dalian Commodity Exchange. Although a stronger ringgit capped its advances, we have seen palm on BMD trading above 4,100 ringgit a metric ton. Malaysia's palm oil stocks hit a more than 6.5-year high in the month of November as the production outpaced weak exports.